Good morning, everybody. This is Nicholas Teo from CMC Markets here in Singapore. Today, the 7th of April 2015. Crude basically took whole of attention in terms of trading overnight. We saw prices on both WTI and also Brent being bid up as much as about 5-6% in some cases. Now, a key reason of that, well, this is obviously a continuation that you can see from last week's big move, but a key reason for that is that reports that US inventory of crude has actually been running down, and a key reason why that may be is also the fact that a lot of refineries are starting operations once more after their seasonal summer maintenance, or rather pre-summer maintenance. Also reports of strikes, industrial action has started to ease. Essentially, crude stocks has been brought down, and with that, gasoline stocks has been brought up as a lot of refiners prepare for the busy summer driving season. Now, looking at these sort of price levels, it's sort of hovering at around at this range of between 48 to 53.5 level. 53.5 maintains the next critical resistance for WTI crude. If that breaks, we can see it possibly testing the $59 level rather soon. On the other hand, if it pulls back and this support level of 48 does not hold, we may see it come back down to around the 43.5 level. The bigger picture, however, is actually quite positive for it, because you are seeing more or less a double bottom being formed down here, but just as important also, this base is actually a lot firmer than what we have seen for the last 9 months or so. Now, the other big story today perhaps could be the Aussie dollar. Aussie dollar, like most of the other big commodity pairs, have actually been sold down in the last month, 2 months or so against the US dollar. Now, as the US dollar sort of pulled back and rebounds were seen in the euros and the Canadians, for example, the Aussie dollar continued to actually be tested on the downside. This big sell-off, or this big range of sell down out here, could be an iron ore related trade, where iron ore saw a breakdown below $50, and we saw Aussie dollar from the standpoint of its reliance on the mining business or mining industry has also, suffered a similar fate. This level of 76 is actually quite crucial. We may see this, if we don't see this hold, we can see Aussie coming down to test around the 74.5 level reasonably fast, and possibly down as low as around 73. Likewise, on the other hand, if this level holds, we may see it bounce back to around the 77.5, possibly 79 cents level. But the key thing, as always, is what may trigger off such a move. This afternoon, or rather this morning, we are seeing we are seeing the RBA cash rate being announced at around 12:30. This could set things off if the number comes out, or if there's an unexpected sort of release. But essentially, it's something to watch. But even well before that, at 9:30, we are seeing retail sales being announced, and that could also trigger a move perhaps before even the RBA cash rate announcement at 12:30. Essentially, several data points for you to trade off. Just having a quick look at where more or less our clients are positioned in this. This basically gives you an all clients sort of view. Right now you can see that we are almost right in the middle, 50% long, 50% short roughly. From a position point of view, or from a sizing point of view, the majority are actually in a long bias. However, if you were to look at what our top clients are actually positioned in, you are seeing slightly a bit more slant towards either side. From a top client's point of view, you are seeing 60% of them are in the short, whereas from a position or sizing point of view, you've got bigger traders shorting actually the pair. Whatever it is, it's something to watch out for, and it could set things on fire later on today. Anyway, thank you very much.